So it is 10:33 EST, January 8th. Oil supply is here with incredible shortage. This is frankly one of the most volatile formations on oil I can remember. This is what oil done in a single second upon oil news release. And why has oil been dancing at this very critical level ever since market open? This is how price moves. Decision point 1, decision point 2. What are you witnessing currently? You're witnessing the technicals dominating the news. We're not witnessing any spectacular rally, are we? Price continuing further down, throwing out all the fundamental traders. Respect what price is telling you. Do not touch anything until after rules had been met. I'm giving oil a few more minutes. This is truly picture-perfect reminder of danger of trading oil for beginner traders. Single second formation is not to be taken for granted and quite a common sight on oil. This kind of formation will happen on S&P during a couple of weeks, not single second. So, as much fun as oil is for experienced traders, traders who double their account elsewhere, for newbie traders, it is one of the most dangerous instruments to trade if you are not respecting the price. What are you witnessing? You are witnessing the conflict between the fundamentals and technicals. What has happened with the price? The end of the minor trend was respected for 2 days, but during news release, price gave only temporary pullback and continued further down, showing us the power of technicals. There was no confirmation for a powerful rally. Price will be visiting reversal zone. That's when it will become interesting. Despite incredible shortage of supply, price is heading down, down, down. Simply monitoring the structure very patiently, we're 5 minutes after news release. That's when I start respecting what price is telling me. That's simple. So while we're waiting for oil to settle down, this is picture perfect reminder how critical the levels are. Decision point 1 on S&P had been absolutely critical. And here S&P very clearly showing continuation to decision point 2. I expect a pullback at that level. And then we'll be looking for another trade on S&P. 2 trades on S&P so far. This is oil daily chart, and this is where price had been dancing for the last 2 days. This is where price had taken quite a bit of a pause, but it's not showing anything that position traders should be buying, is it? But it's also a reminder, acquiring short position anywhere near this level is not a prudent thing to do. I have not seen this chart for 3 weeks. Last time I had looked on oil chart was December 20th. And this is when price reached this level on January 5th for the first time, giving nothing but a correction, not a trend reversal. 2 things happens when price reaches this zone, giving us either an opposite trend correction or opposite trend reversal. In a day trading room, we respect daily levels, but our guiding light 1 hour is what determines. Okie dokie, first target is in on oil. So will oil finally get us out of this fascinating dance, reminding you the importance of technicals, not fundamentals. My trail on oil very close. This is my very first target. So you witnessed incredibly critical component, the importance of respecting technicals, not fundamentals. Despite incredible shortage of oil, oil collapsed. How many ticks? Quite a few. 60. And this is finally oil showing the meaning. But don't be fooled, reversal zone is still on the way. You remember when S&P reached reversal zone, it gave us quite powerful push to the downside, correct? That's how price moves. So in order for this trade to migrate into a larger time frame, it has to blast through this level. 8 range is the smallest range chart I would ever touch on oil. Oil is drastically more volatile than S&P. This has been one of the most volatile news releases I've seen, reminding you how important it is to respect what price is telling you. Decision point 2, first target. Completely expected. Reversal zone is still on the way. Bigger the range, bigger the stops, bigger the targets. The same rules apply. Doesn't matter if it's stocks daily, weekly, if it's Forex. Method demonstrated in the room on range charts. Range charts are very easy to learn and very clear to see. So here we are. First target is reached. We are out of oil. Trade number 7 since the beginning of the year. No negative trades on oil this year. So this is what we're witnessing today on oil. Incredible conflict between incredibly bullish news, not enough oil, with price continuing pretty impressive bearish push to the downside. So since reversal zone is reached on daily chart and price had been dancing on this level for the 3rd day in a row, what's very important to remember? Position traders, knowledgeable position traders, should not be acquiring short position at this level. This is also known as a danger zone. Anything is possible at these levels. This is where it's incredibly critical to monitor for formations before acquiring a position. We're witnessing that daily trend today remains very, very strongly bearish. Therefore, we are not finding enough buyers despite very bullish news. So this dance on oil continue. So what am I witnessing on my guiding light 1 hour? I'm witnessing potential for oil revisiting the reversal zone. I could not be more excited about it. That's what I'm waiting for. Very, very critical. Because price showing incredibly clearly not conviction on the side of buyers. So far, 1 trade on oil, 2 targets. The dance is still on. Technicals dominate the markets. There is no buyers, nowhere to be found yet with conviction despite incredible shortage of supply. We have literally what? Almost 6 times less oil than we need. Minus 2.68 versus minus 0.5. And that's exactly what's happening on oil. No rally yet. Will oil finally make it to reversal zone and give us something to talk about? Formula remains the same. It doesn't matter if it's hourly. It doesn't matter if it's daily. It doesn't matter if it's weekly. It doesn't matter if it's range chart. On weekly, all the levels drawn since September this year, price is dancing at decision point 2. So will the buyers finally step in? They know where to be found currently on S&P, as S&P is sitting very, very pretty, potentially finding pretty impressive selling pressure. That's exactly where we closed our 2nd trade on S&P. As we know better, not to acquire long position anywhere near this level. So fascinating dance and very, very critical levels. All the levels drawn far in advance. Pay attention to the volatility we're witnessing currently on S&P. Sellers are here. So far, 3 trades today. 1 trade on S&P reached reversal zone. 2 trades so far on S&P. First trade reached decision point 1, and 1 trade on oil, 2 targets. So despite incredible shortage of supply, we did not get any confirmation from our technicals. We have not had any bullish rally yet on oil. Why oh why? Because just like alpha wave trader method applies to any instrument and any time frame, weekly chart still shows pretty powerful bearish pressure. So any bullish moves would be only corrective. Oil very clearly on daily chart showing pretty strong bearish pressure. Price does not care about the news, but price did respect reversal zone highly, giving us pullback, not a reversal. Until 4 rules are met, do not acquire position if you are serious about trading. OilMonthly is not that far off from revisiting decision point 1. If you remember, on our monthly trade, oil had actually reached the reversal zone, which we can review in the wave class on Friday. And currently price showing potential of revisiting 84.14, as I had been spelling out for the last few months, that everything you've seen forming on this chart, all the bullish moves had been incredibly temporary. This is where oil will come next to, all the way down. Good for Nicholas, our amazing options trader. Hope he's short. It was only a corrective wave. Oil is heading south. 85 is next. So therefore, it doesn't matter what you trade. If you trade range chart, you can trade monthly. All you have to do, play by 4 critical rules and have a count size that allows you risks to trade such large time frame. Bigger the time frame, bigger the stops, bigger the targets, bigger the margin requirements. Very critical and very essential to identify what's appropriate for you and your circumstance. So I will give oil a few more minutes, but once again, what you witnessed today on oil is very common. This was oil news release. This is what oil had done in a single second. Despite incredible shortage of supply and as much as 3-6 times shortage of supply, we have not seen spectacular rally. We had taken only 1 long, as it been nothing but corrective flop. For all the reasons we expected and we discussed, because our guiding light 1 hour chart had been dancing at decision point 2. Price had never made it to reversal zone. Therefore, there is no conviction on reversal. So keeping my fingers crossed to see if we can catch another trade on oil. Nothing on S&P. For all the reasons that expected. S&P is frozen. FOMC in 2 hours. So we're closing at 12:25 this afternoon with once again very powerful and very educational oil day. Why? Because despite incredible shortage of oil supply, despite oil having almost 6 times as much shortage of supply, we've seen no rally whatsoever. None. Oil had done very funky moves in our price structure did not support the news. Price reminded us that sellers are still in charge. Our guiding light 1 hour had been taking a major pause, and as expected, price is heading further down to reversal zone. That's the reason why I love oil news trade. We are constantly witnessing the power of the price, because price is not random. Price is very clear and very precise. And we did not get any powerful confirmations besides taking one trade on oil for 2 targets. And very powerful FOMC day, when we had taken 2 trades on S&P this morning, is not doing much. This is very dangerous area. What am I expecting on S&P today after FOMC? I expect the price to continue much further up. But if you're a knowledgeable trader, you will observe and wait for 4 rules to be met before you would ever take a trade, and would know the importance of these very important levels. So adios everybody! Another incredibly educational day about the power of price and how important it is not to rely on fundamentals, but to know when to trade and when to stay out. Oil had been a blast so far, 7 trades this month with 0 negative. It is January 8th, 4 trades on S&P, 2 positive, 2 negative. Thank you so much. Look forward to seeing you tomorrow.